Hey, good morning, everybody. Welcome to your mortgage rate forecast for May 17th, and hope your day's off to a great start. So here's what we have. Stocks are down today. The Philly Fed came out. That was not a bond-friendly report. Jobless Claims out. That was bond-friendly. But when we get to the technicals, you're going to notice the bonds are down today. Why? Well, I think a lot of the traders are actually trading off the charts right now. So you'll see that here in just a second. As far as the MBA survey, this is from a couple weeks ago. They're reporting the average consumer is getting a rate around 4.8%. Should have an update for you on that by our next video. As far as the charts go, look at this, guys. Went all the way back to really our last plateau, which was early January. And you can see, if you watch my mouse, the trading here is pretty consistent. And we're starting to just get into a tighter trading channel. But I want you to notice the overall theme here. Bonds are consistently trading down, which brings with it higher rates. It brings with it higher fees to get a certain rate that you're wanting to get. So overall, not great news. And here's where we're at. We're at the bottom end of this trading channel. If we cannot hold this floor, I'm estimating our next line of support is going to be at about $100.50. We'll get to that here in just a second. But to kind of quantify where bonds are at now, if we use Freddie Mac's data, Freddie Mac reported in April the average consumer is at a little less than 4.5 at a half a point. Well, if we go back, what that is, that's a difference of $100.26, or almost a point and a quarter. So if the average consumer was paying half a point to get that back then, they may be paying almost 2 points to try to get it now, or at least a point and three quarters. So that gives you kind of some national averages there. So anyway, not great news for bonds still. And my last projection, how did I do? I was a miss, guys. I was a miss. I hate it when I do that. And I prefer to miss where bonds beat my expectations, but they didn't. Bonds actually got worse by about 26 cents below what I thought they would. So what are the analysts saying now? Well, the analysts are a little bit mixed on the short term. They're saying, okay, bearish, we're at the bottom, we could break through this again, which is what we have been doing over the last few trading sessions. So other analysts are like, hey, I think this is our footing, carefully float it. And I would say no matter what, if you do decide to float your lock, do it extremely carefully. We had a client that just went into escrow. We were looking at the bond market, looked pretty stable. We were, right above our floor. And then that afternoon, looked at the bond market. I told one of my assistants, I'm like, hey, contact them, get them their lock options ASAP. I don't think we're going to hold. Lo and behold, the next day, the bond market just dumped. So that saved that client, I would say, right around $2,500 locking the day that we did versus the next day. So to try to get the same rate. So kind of gives you some perception on where we're at right now. So if you are floating, just be very, very careful, because it can change at any minute of the day. So moving forward, I would say if it was my client, they were market savvy, we may float, but just watch the market throughout the day. If they're not market savvy, I would say now's probably a good time to lock, just to play it safe, because we are still in a downward trading channel. So that's it for this week, guys. By the way, as far as the forecast goes, I think we're going to be trading between 101.50 and 150. We're currently trading at 101.94, but again, we have that downward trading channel, and so I don't know if we're going to be able to hold 101.90. So, and if we don't, we will go down and likely test 150. That's almost a half a point difference from where we're at. So we are at the bottom of our floor. There is more room to go upward up to 101.50. That may save you half of a point if you can time it perfectly. But if you are going for that, just be super careful, guys. Okay, that's it for this week. We'll see you next week. Don't forget to hit that like button. Leave those comments below. We'd love to hear from you. And if you'd like updates when we release new content, which is generally weekly, hit that subscribe button, guys. Okay, that's it for now. Take care. We'll talk to you soon. Bye-bye.